Hello, welcome to Momentum Works Answering the Why series. This is episode 2 of Answering the Why, where Alfonso and Jianggan will be talking about a trend in the ecosystem. If you want to find out what we've been discussing in the past, go to our YouTube channel to watch the previous episodes. Enjoy this episode.
So there are many questions that we can actually ask about the region. So for example, one of the question is, okay, we know that Ant has made a few investments in the region. So, but why those investments are actually less successful than what's happening in China? So basically we are trying to answer that kind of question with this kind of report. So for example, if you go to the next slide, we're gonna see that, next slide, yeah. So for example, if we check this map that is actually showing the GDP per capita, we're going to see that in Southeast Asia, basically, the squares that basically represent the GDP per capita tends to be very low and tends to be a bit more orange. What is the meaning of this? It implies that the GDP per capita in general is less developed than other countries, right? And the thing that I think is very interesting is to see that China level of development in terms of GDP per capita, it is in some cases higher, not higher than Singapore, but it's not so different from what's going on in Southeast Asia. So the question for us is basically, hey, what's going on? These regions and countries seems to be different in terms of GDP per capita, but why these kind of things are actually working in China and not in Southeast Asia? And I think that is a very, very reasonable question. So basically we tried to dig in order to understand what was going on. And if you go back to the previous slide, Jianggan, we can see that basically the first answer related to why this is working actually in China and not in Southeast Asia, you're going to see that that the level of demand in China are obviously huge, okay? And also, a subsequent question that is related to that is that there is a big effort to integrate and to connect cities in the country through different means. So for example, one is like the infrastructure. China has made a huge effort in infrastructure to improve it and to connect the different cities. So for example, in this map that we have here, that basically it is showing population density, you can see Southeast Asia that seems to be naked, seems to be very white. And basically what is the meaning of that? It implies that there are no important cities that are accumulating, well, basically population, right? And if you actually focus now in China, you're gonna see that there are many dots distributed in a relatively even distribution through the region. And that is one of the keys, because this kind of interconnection between cities enables the people in order to make business. And also the interconnection between cities also improve the competitiveness of people. So if there is a shop selling some sort of product, they will be able to compete with more shops. And instead of just selling very bad quality products, they need to actually increase the quality in order to be better and in order to be competitive. So that's the idea of having a high interconnectivity that will improve the quality of items, that will improve the competitiveness and the connectivity in the region in general. And that is one of the key things that China has, basically that Southeast Asia doesn't have, sadly.
So can I add something here?
Sure.
So this is a map actually I love watching all the time when it comes to building or evaluating a business idea or investment opportunity, because essentially, even if you're doing B2B stuff, at the end of the day, so the end products will be sold to consumers. Knowing that, okay, where the consumers are and how they are distributed. And also, I mean, think about consumers, they are also the human capital, the workforce. I mean, where the workforce is. So allows you to understand, I mean, how to plan things. And just like Alfonso said, I mean, in China, you have clusters of cities like the metropolitan area and large river delta with lots of cities. So that changes the aspect of lots of things, right? I mean, the way you plan logistics, the way which logistic business model would work, and the way that you build a product, you handle your distribution, the way you sort of build your workforce, and the way that you sort of link your supply chain with the consumers. And compare this to Southeast Asia, it's all different. I mean, if you look at Southeast Asia, I mean, most of the countries, you have a one or two big metropolitan areas, but outside that, I mean, you don't have that many big cities. So that changed the way and you perceive business opportunities. For weird reason, lots of successful startup founders of my generation, they are spending time reading Chairman Mao Zedong's works about I mean, how he won the communist revolution. And a lot of it was about strategy. I mean, he mentioned a lot about, I mean, how do you create a strategic sort of depth that you can tap into. So just to give you an example, so if you are the dominant player of food delivery in China, say Meituan is dominant one now. Didi, the ride-hailing platform, tries to go into food delivery. It tries to attack the city, which is close to Shanghai, called Nanjing, sort of key base of Meituan. And Meituan could very, very quickly mobilize resources from other big cities to support Nanjing. And at the end of the day, it became very difficult for Didi to take any city from there.
Right.
But when it comes to Southeast Asia, you see, I mean, a few years ago, Gojek was like 95% of the food delivery market in Indonesia, but most of that market is concentrated in Jakarta. So when Grab decided to attack Jakarta, it was very, very hard for Gojek to defend. So there are many other stories similar to that, and some people are even drawing parallel between this and how, well, politically non-correct. I mean, how France and Russia resisted Nazi Germany differently, and Russia had the natural advantage because it's wide and it can utilize resources better. So yeah, so just random comment.
Yeah, that's interesting. Yeah, and well, for example, if one reason is related to, well, the demand and how enabled are different cities and their current population, and I think that another important reason is it's also related to the effort to regulate. So I think that, well, I think that it's unfair actually to compare China, that is one integrated country, with Southeast Asia, that is an entire region that is composed of different countries, right? So I think that this is also one of the other advantages of China, is that there is an integrated effort by the country in order to connect all of this in a nice way. So basically, that there is an effort to regulate and to participate with the private sectors in order to improve the current state of affairs. And while you can actually say similar things about specific countries in Southeast Asia, in most of the cases, regulators are in a defensive mode instead of proactive mode. So that is also another difference, is that there is a consistent effort to regulate in order to improve the different components of the country. So for example, if we go to the next slide and we ask the question, what is the state of development of Southeast Asia? Basically, this chart is telling us specifically what is in which position are located the specific countries in Southeast Asia. And as you can see, we will have the chart in the left, that is infrastructure. In the middle, we have connectivity and human capital. So infrastructure is measured by gross fixed capital formation. And you can see that basically many of the countries of Southeast Asia are located in the lower end side of the spectrum. And you can see actually Singapore in the top. So this is something that is maybe not surprising for many. And connectivity, basically this is related to the trade of different goods and services. So you will have also most of the countries located in the lower end of the spectrum. Although in many cases, when country have a lot of natural resources like the US or China, in many cases, this trade per capita is going to be a bit lower. So it is actually interesting. For example, smaller countries without without many natural resources, they usually will score very high in this because that's the only way. That's the only way to make it, right? Because as they don't have anything, they need to actually be able to trade. So this is why Singapore is also in the top. And in human capital is basically, it is all that relates to the current state of the population. It could be their health, it could be their education, it could be their salary. And I think it's interesting to, in this case, we're actually highlighting the education, the higher education, basically all the post-secondary education. And you can see that actually in Southeast Asia, things are a bit better. And you have a country like Philippines, that is something that is I think is interesting. They have around like 21% of the population has some sort of bachelor degree or higher education. And actually, if you check the different statistics, you will say that they have like 2,000 institutions that are like universities, public and private institutions. But in the case of Philippines, they have actually like 90% or 88% or something like that is actually private institutions that are actually providing this kind of education to improve the levels of higher education. So while this could be very harsh, things are actually improving. And I think that the next slide will show you. Yeah.
Can I just quickly add something?
Sure.
It's interesting that you're highlighting the Philippines. I've built business in the Philippines before, and been sort of going back and forth for the last few years. The country is very interesting. Of course, a very good service culture there and for the customers, which is very good. But the level of education, as you highlighted, it is pretty impressive. You have so many people with higher education, and some of the educational institutes are pretty good quality. But at the same time, we look at the other infrastructure like the roads and stuff. Things are behind. So it's sort of makes people think, right? We predicted that the startup ecosystem in the Philippines was going to take off. We made that prediction consistently over the last few years. And it seems that finally this year there's some signs of taking off. Then, of course, COVID is a big black swan, which changed lots of things. But still, we're optimistic about the Philippines for a long time. But just things seem to be a bit slow as compared to the expectations. And I think my sort of thought, Alfonso, correct me if I'm wrong, is that you have good human capital, but on the other hand, you really need like all these factors to come together for this model to move forward, right? If you think about if you think about Ant Financial, there are so many factors in China which allow it to grow to what it is today, and these factors might not exist or are readily available in other countries.
Right. Yeah, that's true. Yeah, things needs to move together, right? Like, what will happen in any country if they have a high percentage of very educated people and there are no proper jobs for them, right? They are going to look for other countries, right? And I think that this was the case of Singapore in the 60s or 70s, that they were actually looking for, they were implementing like new infrastructure, and basically they were trying to look for new ways to get educated people in order to do their businesses. And I think that, for example, I was reading some news that were related to fintech in Vietnam. So like different companies, they were not complaining, that basically they were saying that there was a lack of professionals in order to make their fintech business happen in Vietnam, because basically the percentage is actually very low. And it is understandable, but this is why this kind of dimensions needs to move together in order to make it work. So for example, if you see in terms of infrastructure, how do we depict infrastructure? And you can see basically that in a country like Vietnam, with a small icon that is depicting an industry, you can see that 29% of people in 1991 used to work in the industries and services. But now, like 62% of people is actually working in industry and services. So you can imagine what does this mean in terms of the lifestyle and also in terms of of your salary, right? Because this was people that were used to work in agriculture, and now you have people that is working actually in services or something like that. So a lot of things have been improving, and also the trade per capita has been improving. Basically, this implies that things are companies and the country itself is much more connected, and the human capital, the education, and I think that this is something that we highlighted before, has also vastly improved. And for example, in Singapore, I think that this is very remarkable, is that, for example, in Singapore, in 1991, 6% of the population had a higher education attainment. But now that number is 42%. So that is impressive. So what is the meaning of this kind of modernization for Southeast Asia? So if you check the next slide, Jianggan, you will see that modernization, that is basically is similar to talk about the industrialization or something like that, or basically higher infrastructure. Basically, countries with higher infrastructure will basically have higher salaries. So this is also what we talked before, and this also explains why a country like Vietnam, for example, has been able to increase their salary so high. So it was like $130 in 1991, and now it's like around 430 or something like that. So that is pretty impressive, and all of this is because the modernization in Southeast Asia happened very recently. This is why things have been increasing and growing very fast during this last 20 years. And well, in this chart, you can see that there is a direct association between infrastructure in the y-axis and basically the disposable income per household in the x-axis. So this shows that investing in infrastructure is actually paying off in terms of higher salaries for the different countries. So this is something that is very interesting. So you can imagine that with the sudden modernization that happened in Southeast Asia, this is also something that is moving together with the connectivity. So you will have more companies that are doing more businesses, bringing new people, bringing new technology. You can imagine also the consequences of this. Basically, with technology now, the information that is being processed is much higher than before. Yeah, so, and you can see basically that, well, a higher level of progress in terms of economic development will basically bring also the emergence of the financial sector, right? So while there are many companies like fintech companies, or in some cases banks, that they have the dream of serving the unbanked population, at the end, it is something that is very difficult to do. And while we are talking about fintech, that is something that seems to be very sophisticated. The most important things in Southeast Asia, as we show before, basically due to the underdevelopment of the region, is basically to be able to tackle correctly the basics first. And the basics is basically to provide some sort of bank account to people. So that is the basic. So in this chart that we have here, and I think that this makes a lot of sense, you will see that in the y-axis, we have the number of, the percentage of bank accounts, and in the x-axis, you have basically an answer related to if people has been able to make a digital payment in the last year or something like that. So you can see that there is a direct correlation between, obviously, a bank account and lending, right? Or no, in this case, digital payments, sorry. So in order to push initiatives related to fintech, you need to actually be able to solve the basics, and the basics is related to the banking itself, to creating bank accounts, and to provide the immense population of Southeast Asia this kind of basics. The thing is that it's not so easy. And for example, the next slide is going to show a bit of that. And it's not so easy because it is not something that people just is going to acquire easily, right? You need to have some sort of you need to have a formal job. You need to have specific papers to demonstrate that. You need to have a specific salary, minimum salary, in order to show that. And in many cases, those things are still missing, especially if you have 50% of the people living in rural areas. So what do you do in those cases? And it's complicated. It's not something that you are just going to improve by creating more banks, by putting more ATMs in every corner. That is not going to solve the issue because still the human capital is underdeveloped, right? You still have people that doesn't have enough salary in order to make a living, in order to get a bank account. Or you have people that is not educated enough in order to move to the next step, right? So for example, in this chart here, basically what we're showing is in the x-axis, the bank branches per capita, and in the y-axis, basically what we're showing is the reserves of deposit money, basically how much money, how much bank account money do we have, does country have, right? And basically this is interesting, is that a country, for example, like Thailand, even if they have doing a great effort to improve the number of banks per capita, and actually they have more banks than Singapore, they haven't been able to improve the reserves of deposit money in banks. And why is this? Because there is something else missing. And what would be that thing? It is something related to the human capital. It is something related to the lack of connectivity of the region, of the country that is still underdeveloped. And we can say something very similar to other countries. For example, Indonesia also has have higher bank branches than Malaysia, for example, but they are still not able to push the reserves of deposit money higher than Malaysia. And why is this? The same reason. The human capital and the connectivity of that country is not high enough in order to make it. So you can see, and this is also related to what we talked before, is that things need to be balanced. And in the case of China, things are more balanced, and you have a strong will from the regulators in order to make this happen, right? In order to integrate in a unified way. And also the government is actively regulating. And I think that this is important, is that, okay, if there is a new product, I will create rules in order to know how to process that. But in some cases, in some countries, there are simply no rules. So without rules, you are not going to be able to organize yourself. The country is not going to be able to organize itself in order to create some sort of progress. And basically, that is the entire issue.
Yeah, I just want to add a point about the previous slide, which talks about account ownership versus digital payments. And I think in the past 2 to 3 years, I have seen lots of pitches of fintech companies, and many of them are saying that, oh, we want to provide services to the unbanked population of Southeast Asia because we didn't have bank accounts, and they cite sort of Ant Financial or Alipay as an example in China. And but I think most of them who say that did not understand. I mean, how and Alipay started in the first place. I mean, do you know that in China, to open an Alipay account, what do you need? You need to have a bank account.
Right.
And what does that mean? It means that, I mean, first, of course, I mean, you need a place where you can take the money from. And there's one regulation in China which helped Alipay a lot, which is if you take the first, I mean, I can't remember the exact limit, but for a certain amount of money that you take out of your bank account into the Alipay account, there's zero charge. You don't have to pay a fee. So that means that for a wallet and to top up or to be used by consumers, there's no cost. There's no cost to the consumers.
Right.
There's no cost to Alipay, aside from, of course, I mean, management infrastructure, etc., etc. But on the other hand, if you think about that, I'm not sure if any of you has ever actually opened a bank account in China. You need to physically go to the branch, you need to verify your ID, and I think now they verify your face as well. So you need to have the phone number, which also needs to be verified, and etc. etc. So basically, the bank has done the KYC for Alipay, and Alipay doesn't have to spend any effort to verify whether this person is a real person. And that's a challenge for countries where you don't have where people have not been sort of KYC by the banks. So if you put a wallet or payment system, you onboard users, so you need to know who these users are. Otherwise, you can't entrust them with too much money. So that's which Ant Financial or Alipay didn't have as a challenge in China, but many I think would have challenge in Southeast Asia.
Yeah, that is interesting, and it's so connected, and it makes sense, right? So yeah, I think that it makes so much sense.
So yeah, we have talked about, I mean, some of the fundamental issues about the market, and we have sort of discussed a bit about the infrastructure and how the regulators should be, and how Ant Financial has been doing in Southeast Asia. So Alfonso, do you have anything to add?
Just to highlight maybe the questions, the answer is okay, what can Southeast Asia learn from Ant Financial, right? So I think that one of the main things is to work very close to the regulators. And regulators need to be actually very proactive in order to make this happen. If they actually have a real interest in improving the country, companies need to be very proactive also in pushing this with them. And also they need to be aware that, especially for investors and companies that are trying to go into Southeast Asia, they need to be aware that of the development, of the current development stage of the country, right? So as we saw before, there are many things that are actually new. If a country is underdeveloped, it implies that there are much more things that are going to be new and that haven't been created in terms of actually regulations. So companies need to be aware of that. The investor needs to be aware of that. There should be some sort of alignment in terms of everything, right? So there are many different aspects, right? It's not just the regulations basically stop the IPO. There were many things happening before. There was a progressive series of things that happened in order to reach to that state. And yeah, Ant Financial was one key player. I'm pretty sure that it was a key player in order to the development of the fintech industry in China, right? Because they were able to push this and to break some kind of limits to make it happen, right? And I think the same thing is happening in different countries. But in other cases, there are simply no regulations yet. They need to be created in order to move forward.
I think lots of industry stakeholders, including regulators, including industry players, including the investors, including people who work in the industry, are closely watching what's happening with Ant Financial or with WhatsApp in India. So they try to understand. I mean, from a regulator's point of view, sure. I mean, what did Ant Financial do wrong? And if I'm regulating, should I take inspiration from the same rules in China, or should I just be a little bit sort of more sort of liberal, or should I be like more stringent? And from industry providers' point of view, they look at, okay, does that mean that I will be exposed to the same level of risk in the future? And does that mean that that my business model needs to be tweaked? I think from the people working in the industry point of view, they will probably be thinking that, okay, where should I be? Which company should I be working for, so that my stock options will become something that the company can eventually go for IPO. So lots of people have all these questions. But I think essentially, the most important thing is to understand exactly what happened. To understand that I think most people try to emulate Ant Financial, etc., without understanding how everything came and what's the sequence of events.
Right.
I will not go into the details, but I can tell you that many of the things they did were not because of some strategic oversight like 10 years ago that they wanted to create the biggest financial group and they told the investors the story, but because many things came out of need. I mean, once you build one business successfully, in Alibaba's case, e-commerce, and they realized that, okay, people need payment, and they start doing payment.
Right.
And once they start doing payment, they realize that, okay, my sellers need, because I'm doing escrow, right? I mean, I'm keeping the money, but the sellers need money to
right, yeah,
to buy more goods as working capital, whatever. So they need lending. So what do I do with that? I mean, lots of things came. I mean, of course, I mean, we start doing lending, etc., etc. People start realize that, okay, how do you do the risk control? Then the credit scoring came about. So lots of things came because of necessity. And I think you can say the same about Amazon with these web services. It came out of necessity, and they became a product that you can sell to other parties. So understand that journey, what worked, what didn't work, and what was the infrastructure and what's the market demand which enabled this or sort of hindered this. So that's important. Map that into Southeast Asia, map that into your market. What makes sense to you? What doesn't make sense to you? And I think Ant Financial initially, with their teams in Southeast Asia, some of them made the mistake of creating products that were too complicated for the local market because they've seen that in China. But they didn't know that, okay, for different markets, we didn't have the same level of infrastructure. They needed incremental approach, like in doing things which make sense, and when things progress, they add layers.
Yeah.
By the way, that's the same reason why WeChat failed outside China, because they built a product which is too complicated.
Right.
So understanding exactly what happened, and also engaging with all the levels of the society to understand how it is, and what worked, what didn't work, and also just have a pulse about, I mean, how people perceive it, because at the end of the day, that's going to affect decision making of the government, of the regulators. Yeah, you need to have that sense about different stakeholders in the market, hear them, engage them, and theoretically it's not difficult, but you just need to make it happen.
So guys, that was a very short introduction of the episode, and lots of interesting insights from both Jianggan and Alfonso. I hope that it was useful, and I hope that you find out a bit more about the Momentum Works Enabler report. We have more coming, so stay tuned for the next episode. So in the meantime, if you look on my right-hand side, these are the ways that you can connect with us and find out more about what we do, find out more about the Enabler report, and you can also just contact anybody from Momentum Works to find out more. And if you want to find out more about what's going on, or understand what's going on in our mind, go to our blog. So until next time, I'll see you guys.